Today, billionaire investor Warren Buffett reveals who will take over when he's gone. We have details from Berkshire's annual meeting over the weekend. Apple faces off against Fortnite creator Epic Games in a major antitrust trial. It could affect Apple's lucrative App Store business. The White House admits we may see inflation. We have analysis on where we are in the economic recovery. That and much more, coming up at NTD Business. Good evening, great to have you with us. Verizon is selling its media unit, including Yahoo and AOL, to private equity firm Apollo. The deal is only worth $5 billion. Verizon will get $4.25 billion in cash and will keep a 10% stake in the division. When it bought Yahoo and AOL, it was betting on online ads. It wanted to take on Google and Facebook, but easier said than done. Now Verizon struggled to grow the business. The company also sold off HuffPost last year and recently shut down other media properties like Tumblr and Yahoo Answers. Now it seems to be focusing on its wireless networks and other internet provider businesses. And Warren Buffett has named a successor. He says Greg Abel would take over as chief executive if he were no longer in charge, ending years of speculation. Abel currently oversees Berkshire Hathaway's non-insurance businesses. Berkshire is reporting a strong first quarter of healthy earnings. Warren Buffett and Charlie Munger holding their famous annual meeting over the weekend. And Colin Fredrickson has the details.
Berkshire Hathaway reporting an operating income of $7 billion. That's 20% higher from the same period last year. Its assortment of insurance, manufacturing, transportation, retail, and utility businesses are generally recovering as the economy reopens.
The first quarter earnings, I thought, were excellent. It looked like they were firing on all cylinders.
A concern for the company is how they'll compete with SPACs in acquisition. SPACs are shell companies listed on exchanges that acquire private companies, making them public.
When the competition is playing with other people's money, they're going to beat us. I mean, we're not. That's a different game, and they've got a lot of money, so we're not going to have much luck on acquisitions.
Charlie Munger says it's fee-driven buying. They're not buying because it's a good investment, but because the advisor gets a fee. He says it's a moral failing and something to be ashamed of.
I don't mind the poor fish that gamble. I don't like the professionals that take the suckers.
Someone asked about the failed investor proposal that Berkshire put out annual reports on diversity and climate change, with roughly a quarter of shareholders voting for each. Buffett had opposed the idea.
Overwhelmingly, the people that bought Berkshire with their own money voted against those propositions. Most of the votes for it came from people who've never put a dime of their own money into Berkshire.
Berkshire bought back $6.6 billion of its shares. This after hitting a record last year, buying back $24.7 billion of shares. Its cash pile grew about 5%, giving them over $145.4 billion. Colin Fredrickson, NTD News.
And Warren Buffett is taking aim at online trading platform Robinhood. He said stock trading on a smartphone app is like gambling at a casino. NTD's Phil Zoe has the story.
Legendary billionaire investor Warren Buffett says stock trading app Robinhood promotes casino-like gambling in the stock market.
A lot of that is coming through Robinhood. That's a bunch of people writing. They're gambling on the price of Apple over the next 7 days or 14. I don't think he'd build a society around people doing it.
He says traders who've entered the stock market in the past year are like casino participants.
It's not the brick and mortar casinos anymore. We do have day traders that call us and say, I just lost $15,000 in 15 minutes and I'm panicking. I don't know what to do now.
Mello says calls to her gambling treatment center have gone up since the pandemic.
We have people dumpster diving for their dinner because I make a good salary, but I just blew it all on gambling. And that's online. It's not necessarily those brick and mortar casinos anymore.
She says gambling is not a problem for everyone, but it is for gamblers who are getting out of control.
They're losing more and more time and money, and it is a time thief and it's a money thief as well.
Robinhood responded by saying, people are tired of the Warren Buffetts and Charlie Mungers of the world, acting like they are the only oracles of investing. We're not going to sit back while they disparage everyday people for taking control of their financial lives. A Robinhood spokesman told CNBC that Robinhood is on the right side of history. Phil Zhou, NTD News.
And Epic Games is facing off against Apple in court. Epic says Apple's App Store is an illegal monopoly that charges mobile apps an unfair amount. NTD's Patrick Hayden has the details.
Epic Games and Apple's App Store trial has now begun. Epic says Apple has an illegal monopoly.
And this is really the first shot across the bow toward Apple in terms of defending their moat and what they charge developers and apps as Fortnite look to ultimately go off of App Store and basically do it themselves. And this is something, it's not just about Epic, it's about the industry.
Apple currently takes a 15 to 30% slice of app purchases, including subscriptions. Epic says that's unfair. Apple removed Epic's popular game Fortnite from the App Store for directing users to pay outside of the App Store. Epic wants to break free from Apple's commissions, and it plans to offer its own app stores on the iPhone. Epic says it forked out hundreds of millions of dollars to Apple before it was expelled from the App Store.
App Store is the crown jewel of Apple. And this is something they're not taking lightly. And Apple has really come back aggressively on this. And that's why a lot of eyes will be in terms of this court case as well as all the testimony that comes out. But it's no shock at all that Cook will be testifying.
Apple says its charges are a reasonable way to recoup investment, which it says is about $100 billion in the last 15 years. It also says that its App Store is essential to preserving the security of apps and their users. The trial is expected to last most of May, with a decision to come in the weeks after. Patrick Hayden, NTD News.
And stocks were mixed today. The Dow rising 238 points, 0.7%. S&P 500 gaining 11 points, 0.27%. But the Nasdaq dropped 68 points, nearly 0.5% today. Gap, one of the biggest gainers, clothing company in the S&P 500. The Estée Lauder, though, falling close to 8% after missing sales estimates today. More companies to report earnings later this week, including T-Mobile, Uber, Lyft, Square, Peloton, Pfizer as well. Today, the 10-year Treasury yield falling to about 1.6%, gold rising over 1%, and oil also gaining a little today. And crypto keeps creeping into the real world. eBay says it's open to accepting cryptocurrency as a form of payment in the future, but it's not making any promises. It wants to see how the space develops first. eBay disappointing investors at the weak second quarter profit forecast last week. Now it says it's also looking at ways to get non-fungible tokens or NFTs onto its platform. NFTs are a type of digital asset that exists on the blockchain. They've exploded in popularity this year, with some NFT artwork selling for millions of dollars. eBay CEO told CNBC everything that's collectible has been on eBay for decades and will continue to be so in the future. And a White House official says the Biden administration expects to see some temporary inflation, that as the country comes out of the pandemic. In an interview on Fox News on Sunday, host Chris Wallace asked the chair of the Council of Economic Advisors if the trillions of dollars in new and proposed spending would lead to a serious bout of inflation.
These are very serious concerns, and we know that coming out of an extremely deep recession, that there are going to be bumps along the way. So we expect that there have been supply chain disruptions that will cause some transitory increases in prices.
Rouse, though, insists any inflation would be temporary. She said they don't expect to see runaway inflation. But Rouse also said she knows they have to be vigilant and keep watching the data. One person who is watching the data is renowned economics professor and author Robert Janetsky. I asked him about the inflation fears. I asked him if the figure will be as big as people think.
I think it's bigger. So I know a lot of people are concerned right now. As a matter of fact, I just had a person in here today. We have to have our furnace replaced. And he was telling me that the cost of doing so has been going up 10 to 15% a month. And that's mainly for materials. He said nothing's happening to the labor costs. He said, however, if we start to see the rest of these price increases in terms of our cost of living, we're going to have to raise everyone's salary, and then the price will go up for everything.
Well, we see already with lots of personal goods companies said they're going to have to increase their prices. Food companies have already said they're going to increase their prices. Warren Buffett said at the weekend that his companies are going to be forced to increase their prices as well. How's it going to look for people over the next 6, 12, 18 months?
Well, I think it's going to look progressively worse. And I think the Fed is just being irresponsible. They've been irresponsible in the past. They seem to be very easy to be able to create money because it's so pleasant. I mean, what's wrong with creating money and seeing the stock market go up and seeing businesses prosper because they've got so many customers? That's the easy part. The hard part is if you overdo it, and I believe the Fed has overdone it in spades, but if you've overdone it to this extent, it's going to be very difficult to rein in the resulting inflationary pressures. And this Fed doesn't seem to have any inclination to want to rein it in. It wants to continue to pump money into the system. So I believe that what we are going to be seeing in another year or two is one of the greatest inflations that most people have ever experienced in our history. I think it's going to top the inflation rates of the late 70s, which was another time when the Federal Reserve just got in there, raised the amount of money in the system, and we ended up in 1980 with interest rates in the 15% area. I mean, that's easily possible this time around, especially with the way the Fed has been handling things so far.
Is there a way to limit the damage already, or is the damage kind of been done? They're already speaking about infrastructure plans, another stimulus package, etc.
Yeah. Based on what we've seen so far, we've got really serious problems. Frankly, I would hate to be the head of the Federal Reserve right now, given what's been done already. And the Fed doesn't even seem to be concerned. And when the Fed isn't concerned, I get concerned because they are the ones in charge of the money supply. And they're still telling us it can be 2 more years when they keep putting this money into the economy. Now, I don't think it's going to be 2 years because I believe that even the Fed is going to wake up and start raising interest rates. But if they do what they've done in the past so many times, when they start limiting the amount of money and raising interest rates, it will be too little, too late, and they will be running behind. So that's why I expect that we're going to have a pretty serious inflationary blow-up. And I think it's very difficult to prevent, even if we were to start right now. And I don't see any chance that the Fed is willing to start now to correct what they've already done.
Robert Janetsky. And U.S. manufacturing activity grew at a slower pace in April. A survey from the Institute of Supply Chain Management says companies and suppliers continue to struggle to meet increasing demand. It says companies are facing several challenges, including record-long lead times, widespread shortages of critical materials, rising commodity prices like we just discussed, and difficulties in transporting products across industries. The report also says a lack of workers and short-term shutdowns due to part shortages could limit manufacturers' growth potential. So it looks like there's more demand than can be satisfied. You could say a good sign for an economic recovery, inflation aside. But how much of it is artificially stimulated? First quarter GDP was 6.4%, but that was after $2 trillion in stimulus. David Rosenberg at Rosenberg Research tells me if you ignore what the government paid people, personal income was flat for the quarter, but consumer spending was up 10%. So obviously government stimulus is playing a massive role. But Rosenberg says when that support burns out as we move through the year, we'll hit a fiscal cliff and problems will relapse. Asked him what that looks like.
Well, the fiscal cliff looks like a big withdrawal of the primary source of income for the household sector. So, how it shows up is going to be primarily in a pullback in consumer spending. How can you model this out? Well, we have the template. What happened in the last 3 months of 2020? Once the CARES Act, short-term stimulus, once those stimulus checks ran out last year, what happened? We had negative GDP in October, November, December. You can actually get GDP on a monthly basis. Everybody looks at it quarterly. And we had negative prints in retail sales. And so that's telling you right then and there what happens when stimulus checks run out. You get a withdrawal of consumer spending. Now, some people may say, well, there's so much dry powder out there. Consumers have so much in savings because they got pumped with so much money from the government. But what nobody knows is how elevated the savings rate is going to be in the future. How cautious are people going to be in the future? And there's something else that we have to consider here. Because, of course, we got the numbers on Friday on March consumer spending. That consumer spending on durable goods is up 44% in the past year. So as we all pull back on travel and eating out and service sector spending, we went on a massive binge on stuff, on furniture, on appliances, on electronics, on remodeling your home. And I think what's going to happen at the same time that you get the fiscal cliff is you're going to find that a lot of that previous spending, because it's totally abnormal to have spending on durables go up that much in a 12-month span. A lot of that's going to be pulled back as well. There's only so many swimming pools you can build in your backyard. So there's going to be that added impact when people talk about the pent-up demand in service sector spending. We're going to be flying more and going to the theme parks and the baseball games. That's small potatoes against $2 trillion annually in consumer spending on durable goods. People haven't factored in that we get the pent-up demand in services. We're going to get the pent-down demand on durable goods. At the same time, we get the fiscal withdrawal. I wouldn't be surprised in the fourth quarter. The fourth quarter right now, the consensus is plus 5% for fourth quarter real GDP. I'm closer to zero. And for those factors that we're talking about right now, the withdrawal of fiscal stimulus, plus the fact that people are maxed out when it comes to spending on material.
Do you think it'll show up in the stock market, property market?
Well, I don't know so much about the property market, which is operating on its own dynamics, but I do think that people are talking about at these levels of multiples, what's the risk? Because the price earnings multiple is 40% above the historical norm. The question is, what causes this froth? And look, Jay Powell in last week's question and answer period used the word froth twice to discuss the valuations in financial markets. And of course, he's talking principally about the stock market. So the question is, what would normalize this multiple? What would take the confidence, supreme confidence out of the market? Well, some people think it could be the Fed tightening policy earlier than expected, that we get an inflation scare, the Fed starts to taper. That's a risk. It's not my base case scenario. My base case scenario is that this 25% earnings growth, as per the consensus, by the end of the year, I think that's going to unwind. I think you're going to find, as the fiscal cliff unfolds, analysts will be taking their EPS numbers down. And to me, that'll be the catalyst for a more cautious tone to the stock market. And I think the market, being forward-looking, will start to see that probably come summertime.
David Rosenberg, Rosenberg Research. And the world's largest chip maker says it expects to make enough chips for cars to catch up with demand by the end of next month. It's according to the chairman of Taiwan Semiconductor Manufacturing on Sunday. He told CBS News TSMC has been behind in fulfilling orders since the end of last year. They've been trying to squeeze as many chips as possible for car makers, but only now he estimates they can catch up with the minimum requirement from customers by the end of June. But he doesn't think the auto chip shortage will end in 2 months. He says the supply chain for car chips is long and complex, and it can take about 7 to 8 months. An asset manager, Fidelity Investments, has cut the valuation of shares in Ant Group in half. The Chinese fintech company is at the center of a major regulatory crackdown. The Wall Street Journal reports that Ant Group's new valuation was $144 billion by the end of February. That compares with an appraised value of $295 billion, almost double at the end of August. Fidelity was among a small group of global investors that bought into Ant 3 years ago. Ant's $37 billion initial public offering in Shanghai and Hong Kong would have been the largest in the world, but it was cancelled in November after founder Jack Ma criticized China's regulatory system. Ant Group was forced to restructure following regulatory retaliation from Beijing. Still to come this evening, swimming pool owners face a chlorine shortage and skyrocketing prices. Find out why. We'll take a sneak peek at the new theme park being built in New York. If you like Legos, you won't want to miss it. That and more after this short break.
In uncertain times, people rush to buy physical gold and silver. It's strong, solid, dependable. Now is the time to buy from the trusted source, Westminster Mint. With 20 years experience and A+ BBB rating and our unconditional 30-day money-back guarantee, Westminster Mint is America's dealer. The best value in gold coins today is this newly released 2021 $50 American Gold Eagle coin, certified a perfect 70 by the world's largest grading service, NGC. At 1 full ounce of pure gold, this 2021 Gold Eagle is the biggest and most beautiful coin struck for circulation. Get yours now while you can at our exclusive low price. Call right now and get the Gold Eagle's perfect companion, the 2021 Silver Eagle, absolutely free with your purchase. With free shipping and a 30-day money-back guarantee, Westminster Mint is America's dealer. Hurry for your early release 2021 American Gold Eagle and free Silver Eagle before they're gone. Call now.
Okay, Dad. 1, 2, 3. You saved me. Dad?
Are you okay?
I'm fine, dear.
Your hero needs you now, and AARP is here to help. Find the care guides you need at aarp.org/caregiving.
I want to eat apples and bananas. I need to eat apples and bananas. Why can't I eat apples and bananas?
Support the Feeding America nationwide network of food banks to help provide meals to those in need. Join us at feedingamerica.org.
A chlorine shortage could be bad news for pools this summer. Chlorine sanitizing tabs are running low because of a fire at a chemical plant in Louisiana last August. Now prices have skyrocketed, some even doubling. Homeowners with pools could feel the price increase most. Analysts say it may not get better anytime soon because of the limited supplies. And Kroger's is announcing a new program to make deliveries with drones. The grocer has teamed up with the Drone Express for a pilot program starting this spring in the Midwest. The drones can only carry up to 5 pounds, so Kroger is going to start out with bundled product offerings. For example, shoppers can choose to buy a baby care bundle, which includes wipes and formula, or a s'mores bundle containing graham crackers, marshmallows, and chocolate. The drones can then deliver to customers wherever they are at any time by tracking smartphone locations. Kroger says that means you can have sunscreen delivered to a beach or picnic supplies to a park. That's pretty cool. And New Yorkers will soon be able to enjoy a new theme park based on a favorite childhood toy. Legoland is set to open in north of New York City this summer, and Andrew Thomas has the story.
Small, colorful building blocks are headed to New York en masse. They're part of a brand new attraction there, a Lego-themed amusement park. Located in Goshen, some 60 miles north of the city, Legoland New York is currently in the final phases of construction. That's after a year-long delay.
Yeah, so obviously the pandemic has has had its challenges and struggles. So from a design perspective, obviously what used to be very collaborative in-person sort of design review sessions where you're scribbling over drawings, all has to be done remotely and over camera.
Now it's time to add the finishing touches and start welcoming guests. New on the scene is the Lego Factory Adventure Ride, which has never appeared before at a Lego theme park. The attraction uses facial recognition technology to shrink guests down to a minifigure, based on what they look like in real life.
You're in this cool vehicle. This madcap, crazy character named Professor Brick is your tour guide. You're shrunk down to brick size. You get to see the process of how Lego bricks are made almost from the inside out, from the size of a brick.
The park will feature a total of 15,000 Lego models and lots of Lego bricks.
Our model builders have been working all over the country to put together these stunning models like the dino that you see behind me, 182,000 Lego Duplo bricks in Brad the Dino over there.
The park is set to open in phases this summer to comply with social distancing. Andrew Thomas, NTD News.
As the latest business updates for today, you can still catch NTD Evening News with Stephanie Cox. That's at 6:30 p.m. Eastern. But for NTD Business, that's all for today. Thank you for watching. We'll see you tomorrow.
We have a new channel. Subscribe to us on YouTube at NTD News. Get the highlights of our news broadcast and the most important headlines that we curate especially for you.
Don't miss out on important news. Our videos are being deleted. So if you don't want to be cut off from honest news, take a moment to sign up for our newsletter at newsletter.ntd.com so you don't lose access to NTD. Go to newsletter.ntd.com to sign up for our evening newsletter.